Hi everyone, welcome to July Performance Update. This is Junbei Liu, your portfolio manager for Alpha Plus Fund. Now, July was a challenging month for the performance for the Alpha Plus Fund. We delivered just modest return relative to a market that delivered 2.2%. The headline index return actually masked a very narrow-led market for July. Financials and energy contributed entirely the return for the market. That's banks and the energy companies. Now, this of course was on the back of the flare-up in the Iran war. We saw the energy prices soaring again and their share prices follow suit. Same as for the banks, that the investors have been hiding their capital in the space. And the share price for the energy companies and the banks since have come off meaningfully. Now, this was a very difficult backdrop for a diversified portfolio that we run. Well, let's talk through some of the winners for the month. And some of those names I have been speaking about for quite some time. The market does take some time to recognize the intrinsic value these companies display. And when they do, they will come through. Now, first one that have contributed strongly for us is Domino's. Now, we've been speaking about this company for almost a year. Now, the management changes and has really focused this business on the costs and also sharing the economics with its franchisees. And we are seeing results. The company has delivered and announced the result ahead of its reporting date, saying things are actually going as expected. Despite revenue is a little bit softer because they're focused on growing profitably. Now, we think this company is trading still very, very cheaply on 15 times earnings and on mid-single digit growth. And this is not assuming the company turning it around. Next one is Hub24. Now, we've been speaking about this business for some time as well. It's going through tremendous amount of growth at this stage, benefiting from changes in the industry as well as competitors undergoing a bit of pressure. We think this company have significant growth trajectory and the market is underestimating its ability to grow. And next couple of names, I think we've been speaking about it for quite some time as well. It's a Generation Development as well as AP Eagers. Both companies were punished on investors fearing about its earnings update, very short-term focused, and yet they came through with very strong earnings and projections. In the case of AP Eagers, it has been significant beneficiary of the shift and significant shift in consumer preference in buying electric vehicle. A couple of our detractors is a sign of the market rotation that took place. First one was Zip. The company has been delivering earnings upgrade in the last few months and its earnings is trading very strongly. We're expecting a very strong result coming through in the August reporting season. Share price was unfairly sold off as the investors rotating into defensive banks than the diversified financial in the July month. Well, the next one that has impacted performance, of course, is the energy company, Woodside. Now, we have an underweight position in the company as the share price rallied during the month with the flare-up in Iran war. However, since then, as we mentioned before, the share price has come off quite meaningfully. Now, we maintain our underweight to the energy sector as the market washed through some of those speculative positioning within. Now, of course, it's all about the August reporting season. We're expecting this reporting season will be volatile as always. However, there are a number of themes that we do expect to play out in the reporting season, and we have positioned accordingly. First, we expect the banks to deliver inline result, perhaps a little bit softer outlook, given the changes in the housing market and the outlook for mortgage application growth. Now, follow through, we think the resources would deliver inline result, pretty good result, and with reasonable capital expenditure growth, but the dividend will still be very reasonable. Next, the consumer and housing related companies, we do expect mixed results, and particularly in their outlook, we expect very soft guidance or no guidance even, just simply because our companies or consumers just gone through cost of living crisis, oil price shock. Now the government stepping back, giving the rebate to the petrol prices as well as the tax changes affecting the confidence around the housing market. We expect companies in these space to give guidance expectations, and this is where we place our caution. Now, the growth come to the growth companies. We are selective in this space, but we do think there's opportunities within some of the healthcare space where we expect the growth to return. The companies such as ResMed and the Ramsay should deliver pretty good results as well as good outlook. And then we expect selective growth companies, the result itself should be really strong, namely the Life 360 that has performed very, very well for us. Well, thank you very much for listening, and thank you very much for being a supporter of the Alpha Plus Fund, and looking forward to speak again. Thank you.